My first critique said he spent billions of shareholder dollars that was entrusted to his control. Well, it's not your money, and you don't need to worry about that. Wasting $80 billion is catastrophic. Well, maybe wasting time worrying about the success and failure of others is also catastrophic, at least personally in a very small way. But that is the nature of venture capital. And I'm going to repeat it later, but I'll say it right now. 90% of all venture capital enterprises lose money or lose the entire investment. Only 10% succeed. This happens every quarter, every year, year in and year out, at least since the 1960s, to which I will get to. Hello, everyone, and welcome back to the Moneyball Method Podcast. My name is Mark Shupe, the author of the Moneyball Method, a Middle-Class Manifesto for Objective Investing. And what I'd like to talk about today is in the realm of venture capital, the free flow of capital, and in particular, a specific example that all of you may be familiar with. I'm going to talk about the success of failures, the failures of success, the virtues of venture capital, and keep in mind the Moneyball Method's definition of entrepreneurial success, something that we can apply to our own lives, our own personal financial decisions, our own investment and cash flow strategy. And that is to create the vision, take calculated risks, learn from mistakes, and measure success. With regard to my example today, I'm going to talk to you about a company, global fame, a bit controversial, used by nearly everyone. It's called Facebook. Now, Facebook now has a holding company corporate name, new name by the name of Meta. And I'm going to begin with an article that was published in October 2021, 4.5 years ago, by Bloomberg. The title of the article is Facebook Changes Name to Meta in Embrace of Virtual Reality. And to quote the article, the name change is the most definitive signal so far of the company's intention to stake its future on a new computing platform, the metaverse, an idea born in the imagination of sci-fi novelists. In Meta's vision, people will congregate and communicate by entering virtual environments, whether they're talking with colleagues or in a boardroom or hanging out with friends in far-flung corners of the world. Or will they? The name change follows Meta's disclosure on Monday that it will start breaking out financial results for the new division known as Reality Labs, which includes the Oculus hardware division next quarter. Again, this was October of 2021. It began in January of 2022. The company also said it will see $10 billion in reduction in operating profit this year because of investments in Reality Labs. $10 billion was a big number. Nobody in the social justice universe was feeling sorry for Meta at the time. Now I want to fast forward to March 18th of 2026. About 6 weeks ago. This is from rollingout.com. The title is Meta Shuts Down Horizon Worlds VR, meaning virtual reality, after years of losses. Meta announced Tuesday that Horizon Worlds, the virtual reality social platform that once sat at the center of the company's bet on the metaverse, will be removed from Quest VR headsets on June 15th. The app will be taken off the Quest store at the end of March, and any remaining access through VR hardware will end entirely by the June deadline. What I want to turn to now is a critic on social media, there's millions of them out there, who said that Mark Zuckerberg spent billions of shareholder dollars that he was entrusted to control. As if Mark Zuckerberg is a failure due to this particular change in business strategy, as if Mark Zuckerberg does not have a board of directors, senior executives, and product creators that had something to do with the long-term vision of their virtual reality business model. Now I'm going to turn to VR.org. In an article published on March 27th, titled "Meta is Quietly Walking Away from VR." And to quote, "There was a time when Meta was synonymous with VR. The company literally renamed itself from Facebook to Meta to signal that the metaverse was the future. Mark Zuckerberg appeared in VR demos at every keynote. Reality Labs burned through billions of dollars a year building headsets, platforms, and virtual worlds. The platform never delivered on those expectations. It never drew more than a few 100,000 monthly active users, a fraction of what would be needed to justify the investment. Reality Labs posted operating losses of billions of dollars every quarter. In the fourth quarter of 2025 alone, the unit reported a loss of $6 billion. Billions of dollars of losses every quarter. That is a lot of money. I'm sure the people at Facebook, including Mark Zuckerberg, take that seriously, as do their shareholders. But that is the nature of venture capital. I'm going to repeat it later, but I'll say it right now. 90% of all venture capital enterprises lose money or lose the entire investment. Only 10% succeed. This happens every quarter, every year, year in and year out, at least since the 1960s, to which I will get to. But according to the social media critics, wasting $80 billion is catastrophic. Quoting a history professor I know, compared to what? Compared to the hundreds of billions of dollars that are wasted every year on wind and solar farms and green energy projects to their political donors, hundreds of billions of dollars every year that are wasted on redistribution schemes, not to mention military expenditures. Now I'm going to move to an article from KPMG, the large accounting and business consulting firm, titled Pulse Q4 2025. On a full year basis, total United States, VC, venture capital, investment reached a 4-year high of $339.4 billion, falling just short of the record set in 2021, which is when Facebook changed their name to Meta and began their VR business ventures. In the United States in Q4 2025, venture capital deal values posted $91 billion across 3,378 deals. If 90% of those lost money or lost the entire investment, is that catastrophic also? It was catastrophic to these social justice warriors with keyboards who can post their opinions unlimited basis for free at any time all over the world, thanks to the people like Mark Zuckerberg and the venture capitalists behind him. But what I'd like to do now is switch gears and give you a little historical perspective about venture capital in general. This comes from the Bill of Rights Institute. Was federal spending on the space race justified? To quote the Bill of Rights Institute, venture capital was difficult to accumulate in the 1950s and early 1960s because of income tax rates that reached 91% of the highest incomes. The cutting of tax rates, upward of 30% in 1964 to 65, was central to the accumulation of the myriad capital pools that yield the great venture firms of the late 60s, 1970s, and 1980s. that spearheaded the technology revolution. In other words, it would be impossible to complain about Mark Zuckerberg's VR business investments losing $80 billion over the course of 4.5 years if there was no venture capital earned in the first place from the previous projects, from the incentives that made the free flow of capital far more efficient, thanks to the cutting of tax rates. Yet the social media critic goes on to say, in aggregate, he wasted the entire working lives of thousands of people. Thousands? Well, I guess $80 billion doesn't go very far if it's only thousands of people, but regardless, that is a horrid way to look at it. First of all, it is not his money. It is not the money of the people, the thousands of people whose working lives were ruined. It was the money of the investors who entrusted Facebook or any other high-tech firm to think long-term and invest capital in the business ventures they think have the greatest profitability over the long run, knowing full well that 90% of them will not work out. But the 10% that do have changed our lives in profound ways. I would not be speaking with you today, and you would not be listening, and we would not have the luxuries and time to be able to discuss all of this right now if it wasn't for the 90% failure rate of the venture capital industry. Now I want to turn to an article from January 28th, 2025, a year and 3 months ago. This is from Owen Analytics. The title is How the Magnificent Seven Stack Up, 8 Key Charts. I'm not going to show you 8 key charts, but I am going to summarize the first one. Who is the Magnificent Seven? Well, we know them as NVIDIA, Facebook, Tesla, Microsoft, and 3 other major companies that dominate the S&P 500. In January of 2025, they had $18,000 billion of market capitalization. Why do I say 18,000 billion? Because it's a trillion, and a trillion is a mind-bogglingly large number. A billion used to be. 18,000 billion of market cap among 7 companies. How does that compare to, say, the rest of the world? In January 2025, China's publicly traded companies had a market cap of 13 billion. Japan, 6 billion, India, 5 billion, and $3 billion each approximately in the UK, France, Canada, and Saudi Arabia. So the top 7 countries in the world, not the United States, had market caps that were a bit higher than the Magnificent Seven in Silicon Valley and elsewhere in America. That was a year and 3 months ago. What about today? I saw a headline 2 days ago that said that the market cap of the Magnificent Seven equals or exceeds those 7 countries. But how many hundreds of billions of dollars have each of those governments wasted on green energy projects, on redistribution schemes, on massive compensation packages for party leaders, government bureaucrats, and their pensions? Nobody is complaining about that. Or I should say, very few on social media are complaining about that. Which brings me to social media critique number 4. This is again about Mark Zuckerberg and the shutting down of their VR enterprise. When your social function is to allocate capital, that's extremely bad. Well, the social function is not to allocate capital. Every leader of every major company allocates capital according to their best estimate, their vision, taking calculated risks and learning from experience about what might be the greatest opportunity in the long run for their shareholders, delivering value to a customer base that they hope is growing rapidly, and attracting the talent in terms of employees that are able to help them attract those customers, service those customers, remain competitive, develop new products, lower costs, lower prices, and enrich the rest of us. Ultimately, there is a social benefit to all of that, but the people that want to criticize the VC investors for losing money on business ventures that fail maybe ought to look in the mirror and worry about their own business, worry about the things that they know about and can control, namely their productivity, their goals, values, and aspirations. Which brings me, of course, to the Moneyball Method. What drives these complaints about social responsibility? I would say that envy is one of them. My first critique said he spent billions of shareholder dollars that was entrusted to his control. Well, it's not your money, and you don't need to worry about that. Another might be fear. Fear of what? Fear of independence, fear of making decisions for yourself and personal responsibility for those outcomes. Wasting $80 billion is catastrophic. Well, maybe wasting time worrying about the success and failure of others is also catastrophic, at least personally in a very small way. But it really comes down to the moral code of altruism. We are our brother's keeper. It is for the common good. We have a social responsibility. Hogwash. Critique number 3, in aggregate, he wasted the entire working lives of thousands of people. Well, no, he didn't. He actually improved the working lives of hundreds of millions of people due to the efficiencies and the enjoyment of that is made available through high-tech services that we could only dream about, of which would be far greater and numerous and cheaper if hundreds of billions, if not trillions of dollars were not wasted by the governments that he is ignoring. But really, this boils down to a common mistake in Western culture today, and that is to conflate economic power with political power. Economic power is about voluntary production and trade for mutual profit. To have economic power is good. It means you are using your mind. It means that you are creating values. It means that you are trading with other people, that you are specializing, and you are helping other people with regard to those transactions who really are just trying to help themselves, as it should be. Which brings me back to what I said at the beginning of this podcast, the entrepreneurial mindset. Adopt it personally. And I want to finish with a quote from philosopher and novelist Ayn Rand. A creative man is motivated by the desire to achieve, not the desire to beat others. Please keep that in mind, and I look forward to seeing you again next week. Thank you for joining me. Have a wonderful day.